Welcome to the lounge and the FX report, and starting with the US dollar index here. Now, we were looking at all of this pattern here coming up through here as a wave 4 here, and it was possible and still is possible that wave 4 could be here, and we have our A, B and C wave to this point here, and we'll see this move higher from this point here. But I do think that we need to give wave 4 a little bit of space to move. But the main point is that, well, first of all, wave 4s can be sideways and complicated, so they are a little bit tricky to track in their sort of, until they're matured, they're just a bit, you just got to be a little bit sort of careful. But one of the things that we were going to use to help ourselves is that the 95 here as a tested support. Now, it's tried to get up here as a tested support. Well, trading above something is not tested support. Coming back down is testing it, and it could never really hold. So we would use the high as a reference point. So a move above that high or a move above these highs here would suffice as tested support on 95, and would see the US dollar move up, and would see the euro US dollar mirror opposite move to the downside. And this would have also sorted out a lot of crosses, primary and secondary crosses in the market. So this is still something that we're going to use as well. So tested support on top of 95 gives that US dollar some strength, and you need to work out which way you're going to be playing whatever pair that you're playing from there. But it's a very simple and easy way to justify any position that you're going to take. So we'll still use that, and we are seeing the euro US dollar edge higher as well. From here, we're quite sure that the move up through here is in 3 waves, this first leg here. So would have to label as an A and a B and a C. So we know that whatever happens over here is corrective as well. So it's likely that this is the A wave, the B wave to here, or to here, and then the C wave moving a bit higher through here. But we cannot turn bearish on this particular market unless the top of group 1 here, the number 3, is breached and becomes a retested resistance. Well, there is a little subtlety to that as well, and we're going to drill in and have a look at that, and we did talk about it yesterday. Don't worry about this here too much. We'll just remove that, give you the wrong impression, because I don't know how far it's going to move up. I had that there because wave C and wave A can have some equality in terms of time and size and so forth. So normally when we use it working with group 1, and group 1 would be 1, 1, 2 and 3 here, we would normally only short in group 1 once the 2 has become the retested resistance, and then we would be looking for the 1100 down here to be this one to be breached here, the larger number here. So yes, but in this particular case we can use this level here, this price point here, which is a 272 number. If it was 72 it would carry some weight, but in this case it's 272, so it carries more weight in terms of support and resistance, and we certainly wouldn't short above that particular number. In fact, we need to be long above that number, and we also need to be long on support here as well on top of group 1. So no matter the wave count here, it's best to have the trading levels and the wave count giving you the same story. So that's not the case. The levels are saying that the price is supported and you should be on that side of the closest largest number, and that's that. The Elliott count, well, it can have this still as the high here and can fail and move down, or it can complete a move up higher towards the 115 area there. This is the same for a lot of, this pattern here is the same for a lot of markets actually, so you'll just need to work it out from that point. Right, the Australian US dollar here. Okay, just back in the bigger picture here. So look, basically we're down for wave 3, wave 4, and wave 5 down here of intermediate degree in brackets there. In this wave 4 to wave 5 here, we're looking for 5 smaller waves here. and between wave 4 and wave 5 of minor degree here in orange, we're looking for 5 waves down through to here. So let's drill into that there. So from wave 4 down to wave 5 here, we're looking for our 5 waves. Got 1, 2, nice strong third wave with 5 waves in it, the wave 4 here, and the wave 5. So from this wave 4, minute degree 4 to minute degree 5, we're looking for 5 waves down here as well. So in breaking that down here from minute wave 4 to minute wave 5, we're looking for 5 waves. We've got 1, 2, nice third wave, fourth wave, and the 5th wave here. This 5th wave here, yes, it's possible that it could be finished here, but we think that it's just a wave 4. So from this wave 4 down to this wave 5, we're looking for 5 waves in here. So drilling into that here, we're looking for wave 4 down to wave 5, we're looking for 1 and 2, all of this being the 3rd wave. The 4th wave here pulling back the 38.2%, which is at now, and then we'll see this move down. So really, in an odd way, this is also moving up with the euro as well. So once that US dollar finds some strength, then we'll see this move down here to complete this and to complete all the other structures in the market as well in terms of FX as well. So yes, in this case, if the 78 becomes the retested resistance, then you can look to short down here as well. But also to just drill in here, because the 77.72 here, which will be in here, you could use that as a retested resistance to add to short positions. And then the 65, that's all in group 2, isn't it? So 65, 72 and 80, and then the midpoint as well. But this low here should be taken out. So we're looking for an A and a B wave in here somewhere, and 5 waves up here for C here. So easiest if the 78 becomes the retested resistance. Okay, the pound Australian. Now, I always thought this was quite interesting because we're looking for, well, we'd been at this point here in this wave C of B. I know it's a bit complicated, but we're looking for 5 waves up here for wave C, up through here. We have got 5 waves here, but I know from my experience is that once the market's got supported on minor trading level 8 here, then you know, if a market was going to fail, it would fail at this point at number 8, right? But it's got support at number 8 now. It's done its, you know, it's had its correction across here and so forth. So it's, you know, highly likely that we're going to see a move above number 2 here, major trading level here. But I do have, in terms of Elliott, I do have the 5 waves completed in here. So yeah, a bit of a tricky one, but I think we will move higher, and let's just go in and drill that. So currently I've got this as wave 1 and 2 here, and then all the way up for 3, 4 and 5 here. Now, there is a different way to count this, but it still doesn't give me much difference. I could have blue wave 1 here, this wave 1 here. And the reason for that, because this one here appears to be 5 waves down through to here and 3 waves up here. So this could actually be over here, but it doesn't make any difference because we'll still have blue wave 1 here, blue wave 2 here, blue 3, blue 4 and blue 5 to here. Now, but what I find interesting is this particular pattern that's come off this high here, because we were looking for a high here yesterday, and just drilling in here to this, that's the high here. What I like about this, well, it's not the point that I like it or not, but the main point in here is that this whole move from here to here is corrective, simply because this move from here down to here is in 3 waves. So we've got a 5 wave structure here. So we could label that a small a and a small b and a small c here, okay? And then, then we've got, so this would all be the A wave here, a B wave in 3 waves as normal, and then the C wave's always in 5 waves. So we've got wave 1, wave 2, wave 3, wave 4, and wave 5. So we could basically go long, excuse me, from here. But as always, it's always good to find, this is a 15-minute chart here, maybe drill in and find a 5-minute chart or 2-minute chart. And what you're looking for is you're looking for a little 5-wave sequence to the upside. It might be small, it might be something just like this here. Then you're looking for an A and a B and a C here, and then you can use that as your reference here, and then move up here. Now you've got 92, 93 here, so support on 93 here would, nice tested support on top of group 1 here, 3 group 1, would send you to the upside. You could also use the 92 here, so you would use the top of group 1 of 92, wouldn't you? So that'd be 92.30 here, and then look to add on 92.50. You could also add on 92.72, because that would be a 272 number there, and you can also add on top of 93 there as well. So don't go buying until you see 5 waves here, 3 waves back, because if you get 5 here in the opposite direction of the market coming down here, then you'll get another 5 over here. So all good there. The Euro Australian, once again, we're looking for a move up into the 50 and the 61.8 retracement area here. So it brings us up sort of closer into the 147, 148 area here. This move down here appears to be corrective. We are looking for an A and a B and a C wave here. It's not quite complete just yet. The C wave here will have 5 waves in it. So we're looking for this structure here. So once you get that pattern that we just looked at just then, this is basically the same. We've got a little A, B and C here. It makes it corrective. This is all a bit choppy and things here, but the main point is that this, it's got overlapping wave structures in here, so it's all very corrective. So we should also see this move up here as well. So you've got to run on the Euro Aussie here as well. The Euro Yen, I mean, this pattern is very much like the Euro US dollar. But basically this is in the bigger picture here. Is what we're looking at here. We're looking at this low here. We're looking for an A and a B and a C wave moving up a little bit higher through here. We don't normally trade wave 4, so we need to keep a little bit, be mindful of that. I'm just going to drill in a little bit further here if I can. 1 hour. Okay, so this particular pattern here, we've got this impulse wave to the upside here. We've got this A, B and C here for a B wave here. So technically we should take out that top there. Okay, so currently the market's at 133 here. So 3 is the top of group 1. So a nice tested support on top of group 1 is the basis as part of a setup to be long. But just to refine that a little bit, if we go 133 here and then 133.30 here, so this is it here, 133.30. So a breach of that 133.30 there, you can even nail that down to another 3 if you want, but support on those levels there also sends you to the upside as well. Just going to have a quick look at the US dollar yen. We don't normally do that in this section, but there would be a bit of a setup here. Now the US yen here is also works pretty much the same sort of pattern as the S&P 500. So we've been looking at the S&P 500 in this pattern here as a triangle pattern. So we're looking, and we can see that this is a corrective pattern here. Simply, you don't need to be, no wave counts that much, but you can see the difference between this structure here and this structure here. All the highs and lows here are overlapping, aren't they? So it's a corrective pattern here. So that means that we should see a move up through here. It's just shaken out all the stops at the moment before it moves up. So I would suggest something like the 117.50 is a nice tested support there, or simply taking out these highs here. You could trade long here and move up, taking these highs out here into this space over here. It's just something to look for as well, but also look at the S&P 500 too, developing support or not on the 2000 there. These two markets should run the same there. Alrighty. Yep, that's about it. Okay, thanks for tuning in. Cheers.